All right, Sunday, November 6, 2016. I want to go over real quick with what's going on this week. Sunday night, we have Bank of Japan. They have their minutes that come out in the evening. Next week, we have Veterans Day on Friday. Banks are closed, markets are open. The election, of course, we have on Tuesday. If you do get a chance and you want to indulge yourself with facts, they have International Perspective and Simply Economics. It's a lengthy, lists everything, global markets, things that happened previously in the week. What I always find is over the weekend, a lot of people lose their focus on what happened the previous week. That's another reason why I like looking at weekly charts, because people have a tendency of forgetting. One week something's really hot, and the following week it's somewhere else. What was it, 2 weeks ago? We talked about a merger of AT&T and Time Warner. Didn't get much reaction, but we definitely saw the sign that the marketplace could not hold even that. So, but also, let's take a look here. The election, some data, typically your basic data on Monday. We had non-farm payrolls on Friday. We are beginning to take a few people more off the couch. But a lot of this here, it's going to be with the baby boomers coming out of the marketplace. That's how things are going to change with employment. It's technological advances is basically the big headache and the shift with women in the workforce. Budget, natural gas, money supply, your basic stuff here for this week here. So, right, jobless claims, blah, 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 yeah, okay. All right, so that's with the data. But what I wanted to point out was Friday's close essentially was right at the lows, basically. Okay, and we're back at the 2080 on the S&P. So what I wanted to point out, okay, so what I have here is the Wilshire 5000 index. Okay, this is basically the market cap of the United States stock market. And what I've done is I've also added in put-call ratio on here too, because I noticed that the put-call ratio on a daily basis was reaching areas where there's usually a pause or a reversal. So I wanted to bring that up. Now that price is closed at the low, they need to either continue and turn the put-call ratio. Okay. Let's take a look at it down here. What I did is I took the price, divided it by the put-call ratio. This goes back to the beginning of the year. So we have the lows in the beginning of the year. Okay, here's December then. I put 3 dotted lines here where it's bounced off in the past. Okay, when it's come down to this level, bounced off. And I have vertical lines here marking where we're at. So on last week, since the beginning of the month of November, we've already tagged through. Okay, so what I'm getting at basically here is that they are buying the puts, okay, and they're not buying the calls. So as a speculator, I want to go against the herd. So you basically stay short the futures or what have you if you're short, but you'd buy some protective calls, which wouldn't cost so much, right? Because they're not in demand. Now, what I'm looking at here, though, is I'll have to stretch the upside for 2 days through the election and a relief rally. Even though we closed at 2080 and we could turn into a waterfall, you just have to be aware that currently the put-call ratio is at an area where it has reversed before. Now, you could have, all right, so if you look at it, this one hit the middle line. This is the momentum low. Basically, when the Santa Claus rally or the year-end rally failed to develop in 2015, okay, at the end of the year. We basically had a bounce off of the July low, rolled up, traded higher, and then we rolled down. into the 1800s on the S&P. Okay, so here we are. Okay, not at the 1800s, but at a 2080 level, and we're getting put call ratio to show in an area where typically it pauses. Okay, so what you could do is you could actually have a couple 2-3 day bounce and then roll over. Basically, we relieve the pressure of the put call ratio. Now, I'm not saying it's stopping here, but I am saying that I had targets of 22 to 24 area on the VIX futures. Okay, and we're about 80-90% of the way there. So it's one of these things where you tighten up your stops. And if you want to go and buy some puts, I'd wait. You know, technically, most of you should already be short, right? I mean, you know, it's a broken record thing here for a while. So that's if you're initiating a short position now, your risk is greater here. I'm not saying we're going to get a full reversal in the stock market, but the put call ratio is at an area where we have had reversals before. I believe that we will continue lower, but any strength that you see in the market, I'd look to short it. Unfortunately, on the little dots again too, we're approaching an area too where we've seen a bounce in the past too. So now we have the underlying issues underneath beginning to find areas where, for those that have been beaten up, have already lost 50% plus. Let me take a look here real quick. All right, screener, quick one here. What do we have? Quarter 50%. How about year to date down 30%? And then sorted by, they're going to have market cap. We'll do the market cap. Okay, so what I have now is I have stocks that are down 30% year to date by a market cap. Okay, we saw in the previous ones here that it was the volatility ones. Basically, gone through the whole year, and your volatility have been beat up pretty good. What it is, we started the year, we got around the 1800 points. Okay, so what I'm looking at is here you're looking at names that are down 30% for the year, sorted by market cap. Then you go to 50%. Okay, we started at the year, the market around, we'll say 1800. And we're at 2000, and these here have lost half their value. Okay. That's a split. And then, but what I'm pointing out is that here you have with the sell-off underneath in the marketplace. Okay, so a lot of these have already fallen here. It's 50%, and that's 75% off for the beginning of the year by market cap. All right. There are 6 pages, and I believe there's 40 pages on a chart. So we're talking there. Here's 250 stocks that have lost 75% since the beginning of the year. This one is split. So, there has been a lot of selling going on underneath. We're now just waiting for the obvious indexes. You have your Googles and your Amazons and things of that nature, Facebooks and that at the highs, and the money narrows, it goes into a narrow bunch, and then that stops, and then you have precipitous rollover. But if there are any sell-offs, what you want to do, this is how I look at it, is any sell-offs that you have, hard sell-offs, these have already been beaten up, so you wait for days that they begin to pause. Okay, so obviously we'll go over more on this on Wednesday to see if we do get a relief rally off the 2080 level here and bounce back up, or if we see all these issues that have been beaten up, they finally come back on board. Because to go higher, I believe we're going to need a broad-based rally here, and we've been moving up for a while. On that put call ratio again that you have here, okay, basically we're at an area where prices turned before. Okay, this is on a daily basis. If I move over, let's see here, get you out of the way. Go back to the beginning. Okay. All right, and I have 3 put call ratios here total. You have a total put call ratio. Okay, this is on a daily. All right, going back to the beginning of the year. So here's up at the highs again. So you can see that we're at an area that there's susceptibility of it to turn, and that would be, say they turn on a dime, and then the shorts and the indexes, we'll say, are the ones that turn it. It's not that we end up start buying a bunch of calls. The people in the index all of a sudden start taking profits, and it starts waterfall, and it feeds on itself. Something short, sharp, and quick. As if we do see reversals, should be that. We shouldn't go see foot around here. But you can see that put call ratio total, it's at an area where the markets have paused or turned before. And so that was what I just wanted to kind of point out. This year, same thing up in here. Here's the Brexit swoon. You know, it got to 101. This was on the equity side. Okay, so here we are. This is Brexit, right? And here's where so there is, you know, possibility here of a pause or a sharp short cover rally. And basically, I'm just trying to warn you on regards to if you do go all in kind of thing, that and it reverses on you and you want to know WTF, there you have it. Also, this is a weekly. Now this one's just I'm just using one of the indicators that came with it, or one of the charts. This is 1 divided by the volatility index, and on here, this is on a weekly, so you can see basically the weekly is getting to an area. That's basically where the daily is. But if you go back and look at 08, it's down here. 09, this is the low in 10. Here's a peak. Okay, with equities, right? Here's 2014. So underneath, there's been some selling going on for a while. Rotation. We basically been rotating. But here's where we're at. So what I would look for is I would confirm a low in the stock market when the weeklies washed out. Now I'm still looking for some sort of hard sell-off. I'm not looking for a bear market. Yes, we'll hit a bear market, but some sort of quick hard sell-off. And what that would do is that would entice the pros then to come back in and scoop it all up and start marking everything up for a run up into the recession. Okay. And that's how I look at a lot of the we really don't, we're coming to the end of the year. Okay. So we're adjusting our portfolios. We're going to have to pay dividends and their capital distributions and on and on and on, and tax selling and things. Typically things begin to, we have a holiday this week and a couple of holidays the following, a couple of days off the following week. Then we talk about retail sales. All you have to really do is watch Amazon. That's all I have to say. There are other retailers that look like they've been beat up pretty good. Buckle, and I don't know. I have to drive 3 hours to get to something larger than a Dillard's or a Ross store here in town. Like I said, I just look at the chart. Whatever's there, it's whatever everybody knows, and that's where you have it. But on the weekly side of things, for me to actually begin to turn buying, basically in my head, I'm working on now on where to buy, levels I want to buy. Do I want to buy when the stock market loses a third or a half, or what have you? Put in the resting orders as far out of the money, go till cancel and see if they stick. First thing off, you go look at the colors to see what kind of percentages the market can fall in a day. I was standing on the floor of the Merck in April 4 of 2000, and the S&P was triple limit down and came screaming back. Okay, so take a look at your colors from the CME, and they'll tell you where the stopping points are, like 5% overnight, that kind of thing. And just be prepared. Put your orders in. When it's happening, like that Monday, when the Dow was down 1,000, didn't have one shopping cart at 1,800. I had two shopping carts at 1,800 to scoop up the buys. It was fruitless for me to sit. I poked at the beast and said, I didn't fill up one cart. I filled up two today, and by then it's just hysteria. You have 90% plus of the people, we're coming to an end and I'm buying. So I'm looking for, I would like to buy, I'd like to, depending upon what you have, I'd like to see the indexes lose a third to a half of their value. And then I'd be interested in coming on in. So, and then I'd like to make it quick here, just get it over with, and then we can start running back and start pumping up the real estate. But for the weekly, let's see, here's the NASDAQ version of it. Same thing, high in 2014, low down here. So the weekly still has more room to run. Okay. So the market has more, but in the short term, we're at areas where you do get a bit of frothiness in the put call ratio, which means that if you're buying it, with the VIX higher, it's costing you more. So options are bad enough for people who go long, who buy these things. Now it's even more expensive. So it's one of these things that it's like putting $500 in a slot machine and pulling the handle once. I didn't see one of those in Vegas, but then again, I wasn't looking for one either. Usually, it gives me an idea. I was kind of shocked one time I was in Laughlin and I went through. They had old slot machines from the 30s, and they had 50 centers, and I thought, well, geez, for 50 centers, those were kind of expensive back then, inflation wise. So it was just one of those things that's like, okay, 50 cents back then, just to kind of grasp an idea. Humans, we all do the same thing over and over again, generation after generation after generation. What I like, though, is that the human behavior really doesn't change. All you have to do is listen to wherever the bubble's at. And by nature, everything ends up being a bubble because that's what you do. That's the behavior that we want. Behavioral finance and the other one, behavioral finance investment. Behavioral finance, yeah, I think that's what it is. Using psychology and economics. Economics they call quasi, but then they have political science, which is like, hold on a second, how can poli be a science and economics not? Business is business, boom and bust. Okay, but like I said, we've had a pretty good move here. You can just feel that it's losing its momentum. This looks like, a three-leg off of it. It's, so for me, I'm looking for a hard sell-off, but for the next couple of days, be very cautious of the put-call ratios here. Don't go bonkers is how I look at it. You're already short. So what's the difference in buying some weekly calls here? I guess I should look at those, but we'll go and move to commitment of traders. Let's take a look here. This one's not so jamming. This bar chart site has recently changed their this is the beta, and I don't like it, so I'll have to email them. And then all right, this is your FinViz, and this one doesn't work for me either. So then I go to these guys. Commitment to traders is basically finding out the poker hands of the players and going and looking over these real quick in a quick scan, since I just wanted to stick on equities here. You can see in the shaded area, Great British Pound, it's heavily shorted. Like I said, I'm long. If you're long, stay long. I'm looking for the 130s here. Okay. So I'll be interested in supporting any pullbacks. The move has been hundreds of pips, so I don't have a problem with getting stopped out and getting back in. There's still going to be a lot of room to move. Japanese yen. Okay, here's Swiss franc. Swiss franc is they're okay. So This is the Swiss franc here. I look for when they give you the history. I'm looking for when they're kind of buried again, you know, like the British pound. If you look at it, it's just heavily short here. Okay, and that's why we're getting a run up. Australian dollar, New Zealand. Okay, here's Mexico. Okay, so here we have the deal with the Mexican peso. So you can see they've lightened their short position a little bit. If they do add on, you know, any new lows down in here, or this is reverse, any new highs, you know, get to 20. I talked about 20. I'd be looking, you're going to end up with probably fewer shorts here. They're looking for a large reversal. Here's oil. This one caught my attention on Friday here. We're down to 42, and this only includes up to Tuesday's data. So I'm sure, I haven't looked at open interest. I'm sure that's come off too, but I'm sure if they're, you know, I think I said around 37 or 38. I guess between 36 and 38 would be my low end for support. Looking at this here, I kind of had it in the, you know, $2 plus or minus at 40. You know, the move from 36 up, or 26 up, 28, I think is when I sent out to buy. 28, and then we got up to, you know, the 50s, and then they're rolling over here. So it's one of these where judging by the commitment of traders, there's a few more dollars to the downside. But that will adjust next week. Natural gas, just by eyeballing this real quick, the natural gas looks like the natural gas, this is negative, so these are shorts, okay? So basically the hard run up cleaned out the shorts, okay? So if I don't want to buy until we clear up here, right? I mean, in theory, you know, go with the flow. Whenever it clears its previous high on whatever contracts you're playing, then that's when you get in, you go with the flow kind of thing. Now we're buying that, or we're, you know, you're knife dippers, catching a falling knife. Well, yeah. All right, so there's more room, more vacuum underneath it, I'll just say. And what's this level? About 250. So we have 240, 260 area. So yeah, so I see just by looking at this here that the hard run up was basically short covering, and there's room for it to fall. And I'm all interested in buying natural gas because I'm looking to play a winter here. It's kind of like we have the mildest winter in 100 years, and the following year we have the worst winter in 100 years. That's how the contrast I'm looking in the how to get in on natural gas. Gold basically looks like, to me, it's flagging out again. I think we talked about platinum and palladium on the weekend. Like everything else, I'm going to have to give this into Wednesday. Usually I give it into Tuesday, because whatever eagerness the herd, you know, the amateurs play the open and the pros play the close. It's the same thing. The amateurs basically can't wait for Monday. They get started on Sunday, but by Friday, you know, the same thing. You know, Monday's your high and Friday's your low. You know, just like with that buyout that never emerged for the marketplace. Same thing. You know, they've Monday mania, they run on in, you know, with the merger mania, and it didn't develop, and by Friday it's a disaster, and a week later it's even worse. I mean, we've already broken through, you know, the 2120 area was, you know, you kind of say, okay, this is getting to be a little more obvious here. You know, mine was when the reversal came through on the NASDAQ, and it couldn't hold 4,900. And so here we are at 46 and change, right? Okay, so here we have, at the beginning of the year, we have the commitment of traders for the S&P. So you can see the prices down here at 1850, and they were short here too. So if you look at the number of contracts, they were short 200,000 contracts in here. They were long 200,000 contracts. And basically we're kind of flopped in the middle here. So basically you also have a situation where we're at 2080 as a support level, and there isn't any, you've basically cleaned out the longs, okay? What we're looking for here is we're looking for to go long down the road here. You know, we're looking at months here, right? from off the bottom to up in here. We're talking, 6 months. But if there is going to be a sell-off, I'd have to say time-wise, you have to use the whole 4-month thing and then go from there. Some of these others, that indexes have peaked. Russell net peaked in 2015, and we just saw the put-call ratios in that, and that's 2014. So there have been some things, like I keep mentioning, an IBM peaking in 2013, that have already been sold off. So, if to take an aggressive short, there's a lot of things underneath have moved. So, if you're whatever age and it's going forward, there's certain things that you want to get into on weakness. I'm looking for buying the beat up equities, mostly technology, banks, insurance, software, things of that. For a business expansion, I'd be looking past 2020. That's how I look at it. The real estate boom, housing and things of that nature, construction, because of after this pullback, which would I would be probably looking at some sort of a bottom in relationship to the commodity cycle. Then we're going to go forward, and it'll be in housing. The money will flow back into right. If all of a sudden, we get a pause in the flipping of homes. Think of this: 1987 was the peak. And then we had a recession in 90. And then equities took off, and that's where we're at now in the 90s. And then there was a recession in 2000, and then real estate took off. So it's basically the same thing. I'm looking for some sort of hard pullback on equities. It'll convince people that they don't want to be in stocks anymore for whatever reason, age. There's going to be, 2.3, retirees for little old me. I'm in the middle of all of this. I'm 20 years past 25 and 20 years below retirement, I guess, or 68 or whatever it is. Okay, so, I'm looking for some sort of hard sell-off so I can add, we'll just say index down the road, buy Russell, buy the Qs, maybe some sector type ones. I prefer, like I said, the futures thing. It just works for me. I don't have to hold on to something for a decade or whatever for the cycle, We're working on an end game here of basically unloading a whole portfolio at the peak of the real estate market 8 years away. That's how I look at it. But for now, basically, the S&P players are flat, we'll say. Put call ratio is a little, I said drool, it's not frothy. So just, be careful on your going after your options here. I would lean towards, just buying some calls or something for if we do get a decent relief rally. If you are short, you look at it first as just a hedge. If you're short at, 2152, 2150, I'd put in some options. Do I think we're going to get back up there? I don't think so. I won't give it 100% certainty, of course, because I don't know how badly things can be messed up in certain people's portfolios. So that one didn't work. And I guess I could do this real quick with the put call ratio. I posted a chart of the VXX here, and we'll leave it at that. And this is a 60-minute. You can see that there's a lot of volume down here. So there's a lot of bodies in here. This little area that's poking out is 39. I wrote in minor resistance. So I'm going to say that the minor resistance level here is at 39. And I'll say that maybe we get a bounce off the bottom. I don't think anything political or whatever came through. There should be some quiet sitting on the hands, but I'll look through Europe and then go through some indexes. But I'll say that 39 is a pause here in VXX for in the morning on Monday. The next levels would be little areas that poke out here like 44, 46, 53, 55, 62. Then you have your downside. Okay, this is your resistance levels. Okay. The computer said it's headed to 52, which is kind of like up in this area. All right, so I wrote down eventually these targets will be hit. So what I'd like to see is that there's a pause on Monday in the selling of stocks. We get some sort of short covering rally. There's going to be a lot of, if you're going to be playing off of the radio or the TV or whatever, just be very careful. You have to be quick about all this stuff. Like I said before, when I teach my students to trade S&Ps, 4 points. If you can't pick, the lower the high within 4 points off of a 1 minute chart, we'll say, then, you know, you're going to, and you can't go in with a bias. It's going to be fluid. It's going to go up. It's going to come down. It's going to go up. It's going to come down. So you can just oscillate in between them here. But say 39 on Monday, we get a pullback on Monday. Okay, this is how I'd like to see this happen. Pullback on Monday. All right. Or on the VIX here. So equities go up on Monday. Okay. Some sort of, it tricks up during the day. There'll be exit pulls and stuff on Tuesday. Wednesday, we get some sort of, I would love, of course, just a huge rally past 2120. That would be nice. Okay. So we need to get S&Ps up 40, okay, between Sunday and Tuesday morning. So that's about 8 to 12 points per moon kind of thing. All right. So, or the sun. Which one comes first, Kev, the moon or the sun? Oh, no. Don't do this to Kevy. I have a pullback. Then you want to get into some of this. Wednesday, I would love something where everybody got into my face and said, see, you should have bought the dip. Well, you know, it started off with buying calls, you know, hedging. If you're short December futures, buy March futures. You can do that thing. If you're short S&Ps, well, buy Russell, but that's, you know, that's here nor there kind of thing. You know, buy the Dow, or buy, you know, spread the two between them, and then your risk will drop. And you can also write options against both legs, or I won't get into that now either. So, but what I would prefer would be some sort of up day. I'd love Wednesday just to be one big fat relief rally. I take just a ton of crap from people. And then I would love to then just basically start shorting March indexes, right? Because they're going to get rollover here soon. So that's how I'd look at it. So we're going to start looking at the March contract from here. What's that, Kevin? You can punch that in right now? Oh, stop it. H17, Correctamundo? You betcha. All right, we change this around, change. Well, let's just start with this. Okay, and then we'll go and switch it back. All right. Volume, 3,500 contracts. Okay. You can see that the unbalanced volume, basically, we've cleaned folks out on this one here. So if I suppose, you know, if I'm short S&Ps or whatever, I could have a buy here. That's not my cup of tea, but I would be spread. So I just have to just have to post performance bond my spread on this, which would be, I think, a couple $100. I think is what it is. So for the margin, because you're basically, you know, you're basically flat. We'll just say you're not, but because of there's difference because of the dividend and interest rates and blah, 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 blah. Okay, so we're down to a level here. Okay, these are November's pivots. This is your pivot here, S1 and S2. So on a daily basis, March 2017, S&P futures is at S2. Okay, so usually what happens is when you go from, say, an R2, you go to an S2. So here we're at an S2. In theory, I've seen before, we'll say, oh, down in here, take a look at here. Here was the pivot, S1, S2. Daily blasted through it, closed at the low. Kind of sounds like Friday. Reverse the full bar. All right. So this one would be on the high, would be 2088. And we closed at 2074. So that's 14 higher would be your reversal. And then the following day, she just gapped higher. So here you are at R2, then R1, right? R1, S2, S1, pivot, R1 and R2. Okay. Amazing how it just stopped at R1, right? And then went to S2. Okay, so then it rolled into the following month. So I used these, and then it went above R2, and then it finally eventually hit up in this area. So it did come through. So now here we are at S2. I would have to say that in how I look at it, we'll probably clear this at 2090. If it does reverse, definitely clear the 2090 here on the March. And then up into this area, you'd probably get some sellers. But don't be surprised if you get a full reversal. Why? One, I've been showing you that there's been a lot of selling that's been going on in the background. Okay, so those little itty bitty companies that have been beat up, the last 30%, 50%, 75% for the year, anything, even if they're going to zero, they can bounce up 8, 12, 16, you know, that kind of percentage. Don't call it a freak thing, but 2, okay, you have the put call ratio at a certain area where it'll turn 2, which means that there's a whole lot of puts out there that we want to see go belly up. Okay, 3, we're going to get, there's going to be no more big bad wolf kind of thing or whatever. The election thing's going to be over. Okay, so what happens is you have the massive bounce off the little guys. You also have put call ratio at a turning point, and you also have the quote unquote relief rally. I will definitely take a lot of crap, okay, if it does go from, I'm just picking out if this was narrower, okay, at S2, then I would say it'd only go to here. But I said, you know, all the way up to here, which would be a new high. That's would be something I would be very warm and welcome to get something on a Wednesday, because that would be one hell of a whipsaw. Yes, that's 120 points, but over 3 days, what's that, 40 points or so? You can have it. You can have the Dow up. We did see it on a run up. We did see it move. I think we saw the Dow move 1,000 points. It was pretty quick on how it moved. So you know, that's how I look at the risk. Yes, we're at 2080. Okay, on the December contract. Yes, we're there. Let's take a look at that one too. Okay. Okay, so at the 2080 level, the unbalanced volume is basically cratered off this thing. Okay, so basically we cleaned out any of the longs here. 1, 2, we're kind of back to a halfway area here at the bottom of this cloud. The S2, what's the top on this one here? 21, is that it? 2146? So 2146. So it's not even, okay. So here you go from, what's the low end? 2045. What am I missing? Oh, those are these numbers here. I'm sorry. There, it's already giving me December's pivots off of November. Okay. So all right. So I'll try this one more time. Here we're down to S2. Okay, typically if you get to S2 down here, you go back up to R2. That's basically how it usually plays out. Okay, when you get this, here we are again down to S2. We should go, so it'd be the previous highs. So you can see how you could have massive short cover and rally in the little guys. Put call ratio at an extreme, we're at a support level, and also the whole S2 to R2 type of thing. So like I said, you know, don't be surprised if this develops more than than what's right there. But I also have to stand by what I see. Even though we do get something like that, I am leaning on the bearish side. For right now, it's just, I don't think you can heal everything that's been beaten up. You basically get a massive bounce, is how I'm playing that out. So, and this is oversold on the unbalanced volume too. We basically clean folks out. So be cautious if you're, you know, hitting the put button here. I would like to, you know, I'd like to see something just massive on the other way. And then I'd be interested in, like I said, going out to that March contract and shorting those. Okay. Already begin to roll over. And I think that's that. Yeah, that I hit all my stuff I was looking for. Commodity traders, that didn't work out. Okay. All right. So I'll leave you guys with that, and I'll do another video here, and you have a wonderful Sunday afternoon.